My name is Helke Waeldle. I'm a senior economist at KfW Development Bank. I will say some words on KfW Development Bank in a minute. And I'm responsible for climate disaster risk financing and insurance. Also for that, I will give you a picture what this means. KfW Development Bank is the German development bank. So we work with public funds to finance infrastructure and financial sector, biodiversity, climate projects in development countries. And we are absolutely eager to support the countries in their resistance also against everything that could destroy or negative impact the development they already did. So for that, I'm here to talk about what insurance means for us and for our projects, and to give you a picture how important it is for us, where we stand, and where we want to go. So for that, I also would like to share my screen. I have some slides prepared and not that much, but it's sometimes a little bit easier to show you that in some pictures. So let me just see. You can see my screen now, and I also hope in the right order. So I wanted to show you this picture. So that is, if you see on the y-axis, you see the development, the GDP. On the x-axis, you see time. Normally, a country develops in a steady increasing path. So this is also what we do in industrialized countries. And what you see on the red line is that if a development country that has not that much GDP and not that much of reserves faces a shock, so this has not to be a climate shock solely. It could also be a war or a financial shock or whatever. But whatever shock comes around, you see that the country has to take up reserves and budget to cope with the shock, and then the GDP goes down. So you see this here, and then you see then they need more time to develop to come to the same level again. Then maybe there hits a climate shock, then it falls down again in GDP, and then it even takes a longer time to come to the same level as they have been before. And what you see is that these shocks and not the resilience against these shocks, not to have the budget to react quite fast and to go on, this keeps them under a class ceiling. So they are not able to develop further and further. They are always pumping down and have to develop again. And that is what we would like to avoid. Is a big word in this context. We would like to help the countries, to support the countries with smart instruments. For instance, insurances, not only insurances, for instance, insurances to insure the infrastructure we financed, so that this infrastructure and everything we have developed with the country can last more sustainably in the country and can help them to develop over this glass ceiling effect. Where do I work in? So if we look at the whole scale, when we look at climate and disaster risk, we have kind of a, normally I would like to show this picture in a circle, because it's if we come to the end, it starts from the front again. So normally we look at the country and do kind of a risk analysis. Which risks are you faced? Do you have some climate hazard risks? How big is the exposure if there is a climate event, and how vulnerable you are. And after we have learned that what is there already and what is the gap that exists, we can start adapting the infrastructure we are financing. So this is the first thing. So before coming in with insurances or other measures. We try to do that, what we do normally in our daily business, better. We adapt infrastructure, we try to mitigate CO2 emissions, we try to support prevention. So this means, we have infrastructure that is secured by a dam, or we try to find climate smart infrastructure that are using different seeds that are more climate resilient. And all these things are now our daily business. This has nothing to do with climate risk. But then we come into this red area, as you see here, where you can in the beginning prepare, you can save for an event that might come as a country, but then still this green part stays open. So there is always a gap which you cannot address with adaptation, mitigation, or preparedness. So there's something left. And this is where we come in with CDRFI, so climate, disaster risk, financing, and insurance. And insurance is one part of that. There are also other instruments that are currently developed, also from World Bank, also from AFD, from us. So every development banks are at the moment looking how to address this gap we have before we can then build back better after disaster hits. And talking about, so you see here, insurance. This is a small part of all the instruments we can work with. So there are instruments that can be arranged before disaster. There are instruments that can be arranged after disaster. Normally, we would love to go before disaster because we've learned that every day you spend without addressing the damages you have from a climate event are adding costs. And if you are not able to give very fast liquidity to a country that had a climate event to deal with the disaster, the costs can add up to 100 times. So because people are not going to work, people are maybe eating their seeds they normally should plant. They cannot repair their homes, so all the costs add up. So it's very important to have the money very fast. That's why we love to have something in hand before the disaster hits. And you see, I don't want to go into all these things we have here, but what I wanted to say is that insurance takes a huge part in the instruments we can arrange before disaster. That is here. Why? So insurances, we are not doing this for 30 years now. So this is quite new for us. I will come to our portfolio in 2 slides, what we already do, but I would say the longer way is in front of us. And it's also kind of an instrument from your daily life, and insurance to apply to a complete different culture and environment is also not that easy. So, but what do we see as KfW Development Bank as the advantages of the instruments? So this is maybe quite small for you. I would just give you the heading, and then I think it becomes clear. We look at this at 4 different pillars. So the first one is, what can insurance do for our clients? So we work on different levels. We work with governments, we work with banks, we work with beneficiaries directly on the ground. So, but what comes out for them? What is the utility for them? So we, as I just said, we can reduce the overall costs because we pay out fast, we can fast react, or they can fast react, and then the costs do not add up to 100 times. They can use the scarce capital they have in a more efficient way because they might get an insurance payment to handle other costs, and they can use their budget for what it's planned for. By getting an insurance or buying an insurance or whichever way they get to the insurance, they have to do a risk analysis, which they would maybe not have done before. So they also learn something in the process, and they can do informed decisions because they know what they are facing if we're talking about these risks. And a very important point is that they are not dependent from someone. So if you have an insurance and you get an insurance payment, you can act. You don't have to beg for money after a disaster. You don't have to go to your bank and say, please, 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 increase my loan. You already cared for yourself. You get the insurance payment and you can act. So this is really a part of dignity you can keep for your partners. And then as a second thing that is also very important for us as KfW Development Bank, as we work with loans, we need partners that can take credit risk. So, and developing countries, depending on their development, depending on their security situation, financial situations, the rating differs. So we would like to develop the countries to have a better rating or stable rating, that we can still give them loans. So that's what we see in insurance. If you have an insurance on a government level, for instance, for a loan they receive from KfW, and something happens, a climate event happens, the insurance payment comes in and takes over the installments that they have to do for KfW Development Bank. So the rating is maintained, they have the same credit worthiness, and they can also take on new loans without doing harm to their own rating. This is quite important also for the country at itself. The third point we see is that this is an instrument to get the private sector involved into development projects. So because you might have heard it, there's a lot to do with the SDGs, and currently we have the COP29 where there's they're trying to collect money for the loss and damage fund because the damages are so high and there's a few money. And there's a role, or they hope to have a role for the private sector, because if you look at the funds that are there in the private sector, it would be 1% or something like this that we need to increase the growth and the development in the developing countries. But this has to be also a business case. You cannot say, please, private sector, come in our development project, but we cannot give you any numbers, or we cannot give you information how this will go in 10 years. This is not how it works. So by starting working together with insurances, we learn about what needs the private sector. The private sector learns what do we do with our projects, what can we do, and this is something we want to support. So we're learning from each other, we're understanding each other better, and hopefully in the future we have more private sector mobilization also in this sector. And the fourth part we see on the right is by bringing the insurance sector into the banking market, into the financial markets, it always helps to develop the financial markets regulations also in the country. So we are kind of developing the financial markets in the countries in such a way that the private sector would like to come in there because there are regulations that save their investment, or that they also can give, the country can emittent bonds to get additional money. So this is also something that comes if we try to get insurance companies into the local markets. This is also a topic where we can talk about with the government to say, okay, if you would like to have them here, you will have to do something with your regulation. You have to make it more, sustainable, more advanced. So this is also something we see that could help. But as I said, I wanted to show you something what we already do. So we have all these advantages we see, but we have to now find a way how can we bring this into operations. So you're not supposed to read the left side because I think it's impossible. But I just wanted to say, at the moment, the projects we are doing with insurances are still fitting on one slide. that it's not what I want to see in 5 years. So, but some of them are quite big, and some are funds, and some are single projects. So it's quite mixed. But this is also what I wanted to show. How do we work? We work on 3 levels if it comes to insurances. We work on a macro level with governments and regional risk pools. So one instrument is, maybe you have heard it, the Global Shield Against Climate Risks. This is an international initiative where we gave some money, and then you can apply as a country to get some funds to finance an insurance product for the gap we just analyzed. We also work together with partner financial institutions. So that means regional development banks like the board. This is the West African Development Bank. The members are other countries in the West African region, and working together with board, and that I will show on the next slide, we just can combine insurance and loans, and then it comes as a bundle, and it's easier also to understand for the partners. And then we also work on a micro level, so we also do micro insurances still. We see potential in many other areas. So we're thinking about credit risk insurance. So, but this is challenging. Let's put it like this, to understand it, how it works, to have maybe a pilot and to see how we can deal with this in the future. We also try to do something that ensures the infrastructure we just financed, because normally if you use public funds, you cannot put money into the project after it's finalized, after the power plant is constructed. But we would like to find a way that you can then afterwards also have an insurance against climate events if you are in Pakistan against floods or something like this for the next 20 years. So we are also looking into that. How could this work, that we can also support the country in such an insurance thing? And we always talk to other partners. We talk to Munich Re, we talk to Hannover Re, we talk to Hula, to different players in the market to always learn what is needed the most at the moment, and how to structure ourselves. So you see at the moment we do everything on each level to get experience, and we are about to sort ourselves at the moment and to see what works, where would we focus the next years on. And we have here the meso level with the partner financial institutions, and this is something that we piloted in Western Africa, and it works quite well, and that's why in my last slide I wanted to show you what we did there. Sorry. KfW received some funds from our ministry, some public funds to support the Regional Development Bank board. And board is giving loans to its partner countries. So you have the ECOWAS countries that are members of the board. And if someone one of the ECOWAS countries would like to have a public loan, they go to the regional bank. And now we said, okay, for the next 2 years, each and every loan the board is giving to its member countries, it's now bundled within insurance. Within insurance against, we have flood, we have drought, and we have a pandemic. So if there's a flood, if there's a drought, if there is another pandemic in one of these countries, they receive an insurance payment to repay the installments for the loans they received from the board. The insurance is parametric, so the payout is also very fast. And then you see, well, what is the effect we want to have? The insurance payout will take over the installments to board. So the country has free budget because they don't have to take over the payment, the installment. And this installments here, it's, I think, for 2 years. The insurance takes over the installments for 2 years. And then you can take this budget, this is free for you as a country, and use it here for the fast emergency aid to cope with the climate event you had and with the disasters or the damages you have with the climate event. So it needed, I think, to be quite honest, about 2 years to come up with this structure, to also understand how to develop special triggers in the countries that then cope with these 3 hazards we defined. But what we already saw, we just started this in August, and I think 3 weeks ago we had a flood in Togo, and there was already a payout from 6.6 million to Togo. So the installments are covered, and they can care for repairing the damages they have from the flood very fast. So we hope this. We hope to scale up this idea, this structure, also to other contexts. Yeah, and what we need is always ideas exchange. We are still lacking to get really, if we say on a micro level, we still need ideas how to get the money to the target person. So there's still a problem how to do the last step. But this is why KfW Development is very interested in discussing and receiving ideas and coming together to learn how to make this work and to help the development countries to get more resilient against climate hazards. Thank you very much.
Yeah, thank you also very much. I think you can hear me now?
Yeah.
Okay. Yeah, it was a great insight also in the complexity of this of this matter. And for me, it was very impressive how many parties need to work together to bring real benefit to these people who are in need and need to be protected. And yeah, we believe that blockchain can also play an important part in the coordination problem between these partners to provide a single source of truth where everybody has reliable information and can and remove some of the trust issues between these parties. And yeah, it was great to have you here in online and hopefully the next time in person. Thank you very much, Ms. Waeldle, and see you.